Hey guys, welcome to the Sharks Academy, and in today's video I'll be talking to you about the weekly market analysis moving forward to next week. Okay, so let's start off with Aussie dollar. You can see this is a daily structure, right? We are delivering bullishly, and this will not change unless prices breaks this area. Okay, prices can come down, liquidate this, then give us the shift to go higher. This is definitely possible. So with this current leg, we are looking to buy low around here, right? And of course, we do not just place a buy limit like this, okay? And stop loss beneath this level. We do not do that. We are looking for confirmations, okay? So first of all, understanding that the first roadblock that you can have is this supply here, or this supply over here. So both are valid, right, for sales, okay? So if you want to be a buyer over here, let's go and look, what is this demand zone? So first of all, this demand zone is caused by this demand, right? So break of structure, demand, break of structure. This is a valid demand zone. And now, if we were to look at this level, what do we want to see? I want to see a 1 hour shift. Okay, so that I have a new range to work with, because now the entire zone is this huge. You can see this entire impulse has many buy areas. Okay, and you wanting to buy over here requires stronger confirmation or high time frame confirmation for prices to eventually run into these highs. Otherwise, you want to set a new trading range. And how do you do that? Just go down to the 1 hour or the 15 or the 4 hours. And what you're going to see over here is the change in character or the structural shifts on the 1 hour time frame. So it doesn't have to be in this form. It can simply be a break of structure on the 1 hour like this. So now, once the 1 hour break structure, okay, assuming that you're a 1 hour trader, if you're a 4 hour trader, you want to wait for the 4 hour break of structure like this. Okay, so BOS, okay, and then now you have the higher time frame bias in your favor, right, that we have mentioned over here. And now you're trading just the 1 hour or the 4 hour range. So using the 3-step process that we have been teaching, high time frame bias, 1 hour, okay, and then look for the S&D on the 5 minutes. So perhaps your 5 minutes S&D is maybe around here. Okay, so assuming you have more than one, you have one over here and you have another one over here. Okay, that's usually the case, right? And then what you want to go down to is the 1 minute time frame. Okay, understanding you have a 5 minute demand zone, you want to go down to the lower time frame, like the 1 minute, to look for your structural shifts by means of Wyckoff, by means of the transfer of weak into strong hands, by means of the structural shifts. Okay, so something like this. Then the break of structure, the pullback. Okay, and this can repeat over here. Okay, and this move over here is ultimately going to bring you into this high. Okay, this move over here has a less likelihood to push prices all the way onto the daily highs over here. Okay, that is everyone's goal ultimately, yes. And I would say there is a chance, but of course all of these you can see are sell areas for prices to continue this bearish move, because what you are doing over here on the lower time frame is to try to catch a move into these supplies. Okay, because this move now is still bearish. This trend now is still bearish. And for this to actually move into these highs over here, you have to see a real break of structure over here, like this. Break of structure, pullback, then this move can potentially go higher. If you're expecting a 1 minute shift in structure over here to move into these daily highs or even weekly highs, then this is not being realistic, right? You have to see these movements, these supply zones, these roadblocks over here getting broken. Then you can catch these continuation moves higher, leaving behind liquidity highs here. So ultimately, we are trying to trade into this level on the weekly time frame. Okay, so of course, you are going to catch buy sells inside of here, all the way into the last sell to buy candle, which is this. And now, can you see currently we are sitting at this level? So now, for prices to make a move into this liquidity highs, you are expected to see at least a weekly shift, right? Which means to say you want to see prices breaks this high here. So unless the weekly time frame breaks this high, you are not going to see a move into this level, okay? Or maybe even this area over here, okay? This entire area, all right? So this is where we are trying to ultimately trade into. Okay, after we see the break of structure over here, of course, liquidating all of these levels, right? These highs, these highs, these highs. all of this will be used as liquidity if prices were to break this area. So now, on the weekly time frame, again, if I want to be a seller, I'm going to sell here, right? Because this is the move that has the potential to push prices lower to break this level, alright? This is a valid break of structure. Of course, you are sitting on the demand now. So if you are looking just at this level, without this demand area, traders are going to look to continue this bearish movement. But we as smart money traders, we know that this is a demand area that broke structure, and now we are trying to buy low. We are now at our current price of interest, and of course we are looking to buy. But do we buy now? We don't buy now, right? Because on the weekly, at this area, we are still bearish. Okay, so ultimately, yes, you can be a buyer on the lower time frame, like let's say the 1 hour. So the same thing happens. Okay, understanding that first of all, we are at a demand area on a higher time frame structure. We have lows being liquidated. You can see this is a retail support, right? And let's say we see a break of structure here. We see a shift like this. Chances are you're going to catch buys, okay? But where are you going to buy into? You're going to buy into the weekly level that we mentioned just now, right? Here. This means that you have a range for you to trade from this level into this level. And this is a huge move, maybe about 150 pips, all right? So now, as a 1 hour trader or a 4 hours or a daily trader, you wanting to see a break of structure, let's say on the 4 hours over here. A break of structure, leaving behind demand for you to get involved. And you are going to trade this bullish move ultimately into your weekly zone, okay? And now, at this point of time, you are at a decisional point, okay? You are fighting between demand and supply, right? Because this is a weekly supply. We do not know whether this supply is going to hold. And true enough, we are going to see some sort of reaction or rejection. So the truth is that prices can do whatever it wants over here. Maybe something like this, okay, to trap traders here and there. After that, if prices were to break structure, go and track where is the reaction. Where did prices last went to before the break of structure? You will know that this is the area to look for. Because this is the lowest it went to before breaking structure, and this becomes your flip zone, and you could just wait for prices to come back before the shift, okay? And at this point of time, we are going bullish because this break of structure over here is on the weekly time frame, and we should see a run into this level at the very least, okay? So can you see that on the 1 hour time frame or the 4 hour time frame, you can trade into your weekly supply, and when prices reach your weekly supply, you are now in a decisional point. You are battling between supply and demand. You just wait for one of them to fail. And in this case, if the weekly supply fails, right, by means of this move over here, this sell to buy, leaving behind the demand area, then you are looking for prices to pull back into this area or move higher. So let's say, what if prices doesn't pull back? Okay, what if we see a break of structure and prices keeps delivering higher like this? Then you're essentially just going to keep trading this bullish move on a higher time frame until it fails. Okay, so when it fails, then you understand that, okay, prices has the intention of going into this area to mitigate the demand that caused this supply to fail initially, then catch the move up. So at this point of time, of course, you can be a seller like this, understanding that you're going to sell into this demand to buy. So can you see that with all of this framework and all of these bias and story and projections you have in your head, it makes trading Euro Pound so much easier. Next up, we have the Euro Yen. So, okay, let me just remove all of these drawings. So you can see over here, we have a very nice support zone. And prices actually taps into this level. So I'm expecting prices to actually break this area to grab liquidity, right? So what I want to see over here is to look for sells because I want to grab all of these areas, okay? Let's go down to the 4 hours. You understand that we are in a sell side move. You can see prices broke structure and broke structure again. So if I want to be a seller, I want to sell here. Okay. So simply look for the shift in structure when prices comes back on the lower time frame. Like this. The shift, the pullback to the last buy to sell, then the breakdown. So you can of course aim for liquidity lows over here or expect prices to run this support area, okay, by means of retail. And then with this, we may see a huge reaction from here to go higher. Okay, we do not know, and this isn't our job to know, right? We understand that we are just going to trade the sell side move. We're going to trade the bearish order flow. We know that prices are delivering bearishly currently. We have a break of structure, liquidity high, liquidity lows, protected high, strong highs, pivot highs, whatever, right? And then over here, we are just going to look for confirmations by means of locating where's your SND. This is the SND on the 4 hours. Look for structural plays on the 15M or the 5M, and then take these cells towards this area over here. Next up, euro dollar, break of structure here. Protected high, liquidity lows. This is a supply, right? So I would say this is already a refined area. If you wanted to look for the entire buy to sell, it's over here. So of course, you understand that our step 2 is to look for refined areas, and that is why I do not want to work with this entire buy to sell. I want a tighter range to work with, right? So 8 hours break of structure, you want to go down to the 30 minutes or the 1 hour to look for refined areas. So let's say on the 30 minutes, we have this one over here. On the 1 hour, we have this as well. So this is a valid buy to sell, of course, right? Here. So you can actually use this entire area. So let's remove the big one and just work with these two POIs. Okay? So now, first you have an 8 hours break of structure, you have a 1 hour refined area S&P for your step 2, and now you're just looking for confirmations into these areas. So now with a 1 hour S&D zone, you're going down to the 5 minutes to look for the structural shifts. You can use whatever entry criteria that you want to. Over here, we can use structural shift, S&D flips, Wyckoff. Okay, so prices can do whatever you want over here. So unless you want to be a participant to buy into your sell areas, you do not care about what happens over here, right? Of course, you can see, first of all, we have a break of structure. We have a potential demand somewhere around here. You can catch the accumulation into this area, the transfer of weak into strong hands. That's into last sell to buy to go higher. And this gives the incentives and the intention of prices to go into your supply zone before you can sell. Alright, so unless prices starts to accumulate over here to push prices higher, you are not going to see prices moving into your supply area. Of course, you can just keep waiting and waiting when prices keeps delivering bearishly, right? And unless it turns bullish over here, you will not reach your supply. Okay, so now when prices reach your supply, you are looking for the distribution process. Okay, you want to see a structural shift, of course, the same thing. Let's see, a distribution process, right? This is the shakeout, the break of structure, the pullback, then the last buy to sell. This is where you get involved to lower prices. So this is if you're working with a lower time frame structural shifts. So I know more conservative traders are looking for the 15M break of structure on the 1 hour. So the truth is that you do not have to go down to the 1 minute or the 5 minutes to look for any structural shifts. You can just wait for a new range to form by means of a 1 hour break of structure, right? So let's say you have this move like this, and this can be your 15M BOS, this can be your 1 hour BOS. Okay, when this break of structure happens, then just trade the last buy to sell. Alright, so here's the thing. If this is your 15M BOS, okay, this BOS taps into a high time frame demand, let's say your 1 hour demand or your 4 hours demand, and this pulls back, this is not this is a risk entry, because now you are battling between a supply and a demand. You have a 15M BOS, yes, but you're tapping into a higher time frame demand area. So this becomes a decisional point. So there are two ways to trade them, right? So over here in Sharks Academy, we have two ways to trade them. First, we go down to the lower time frame to support these buyers. If I see a shift over here, this may be the signal or the intention that tells me this demand is going to fail. Okay, because ultimately we are operating on this higher time frame bias. Okay, I want to look for clues to tell me that this demand is going to fail by means of a structural shift, a distribution over here for prices to go lower. Okay, second is you wait for the demand to fail. Okay, that is the easiest way. Of course, when this is a demand area, it taps into the demand. How do you know whether the demand will fail or hold? You simply wait for the demand to get broken. So now, can you see that this demand gets broken, right? And all you need to do is to trade the supply that caused the demand to fail. So I repeat, you want to trade the supply that caused the demand to fail. So if this break of structure happens, the last buy to sell comes from here. And what you want to do is to trade this flip zone. Okay? This is the flip zone. This is the supply that caused the demand to fail. And over here, we are going to look for a confirmation on lower time frame, or you can just place a sell limit over here. And of course, this is not financial advice. Please know what you're doing before you actually place a sell over here if this entire narrative over here actually happens. Okay, so if you want to know more, please understand that we are having a giveaway until the end of November. So if we find that you are a trader with a good learning attitude, a determination and passion, then you can actually come and try, right? Fill out the evaluation form over here and we'll actually assess you. Okay, otherwise, let's move on to the next pair. Next up, we have the pound yen, and you can see we have a break of structure here. Alright, so this tells me that I want to buy, but this doesn't mean that I'm going to buy here. I'm not going to buy here or here or here, right? I'm looking to buy low. I'm going to buy over potentially here and somewhere over here. So this is likely a weekly high. Okay, let's see whether it's a monthly high. Okay, so this is a monthly high as well. So right off the bat, on the weekly time frame, I'm going to buy at this entire sell to buy over here. If I go down to the lower time frame, you can see this is an inside bar. We are definitely looking to buy here as well. Okay, and let's go down lower, maybe the 4 hours or the 8 hours, to look for refined demand area. So you can see there is a literal last sell to buy here. Okay, so if you want to get the best prices, you are definitely going to buy here instead. Okay, so let's take a look. Now we have a monthly breakout structure here. Alright, so we are going down to the lower time frame and we are looking at the daily or the 8 hours, okay, or the 4 hours even for S&D zones. So if this is my S&D zone, this is my daily demand. We have two POIs to work with. Okay, so of course, daily demand, we are looking at a 1 hour shift. So what I want to see is a 1 hour accumulation process. Okay, the shifts, the break, the pullback, and this is where I'm going to look for areas to get involved. But this move over here does not guarantee that prices is going to go higher into ultimate liquidity highs over here. Okay, I may get a shift into this supply zone for prices to go lower, either respecting this demand or head lower into this area before the shift happens. Okay, so first of all, you have to understand that there are so many scenarios can happen over here, right? This could happen. Prices may actually give us another accumulation inside of here. So let's say prices taps into supply, fail to make a higher high, breaks down, okay, then gives us an accumulation to go higher into this area, and then respect this supply to go lower. Then continue this move into this area to break structure, okay, like this. Then accumulate again to go into this supply, and if this supply holds, taps into demand, fail to make a higher high, breaks down, shifts again, you see, taps into supply, and this time it respects and move higher. Okay, so let me see again, break of structure, taps into supply, comes back down, all right, and then this time it makes a higher high like this. Okay, so can you see that there are so many ways this can play out, so many ways this can happen? You can have multiple shifts, but does that mean that you're going to lose all of them? So let's track back. Break of structure, demand area. If you bought over here, you have earned money. Okay, same thing. Break of structure, demand area. Okay, and then the same thing over here. Break of structure, demand. And you see, this is not even a break of structure. This isn't a valid POI at all. Okay, first of all, this has no POI. Okay, the POI is here and here, right? And this is not a break of structure. A break means this level. Okay, and over here, same thing. Break of structure here, and then demand area here. Okay, so depends on how you manage the trade. Okay, if you're actively managing your trade, right, then you can have earned money off every single shift. Alright. Otherwise, just look for the last area over here and look for the shift, and that's it. Okay, if you are able to manage your trade, then that would be great, because if you are expecting prices to run, right, every time it shifts over here, you expect prices to run into liquidity highs, then that is not possible. Okay, if you take a look at NU and NJ, right, a trade that we caught like this Friday, I mean just yesterday, right, you can see this move over here on the 15th. Okay, when prices shifted on the 15th, we do not expect prices to run all the way into liquidity lows over here, right? But can you see how we actually manage our positions? We understand that, okay, I took a sell here after the 15M shift, taps into a POI. I manage my positions by having my first take profit over here. Alright, 1:2.3. I took 50%. And then this is a low. I took another 30%. And then at these lows over here, I took another 20%. And this is how you actually manage your trade. So yes, I'm risking 1% overall. And this 1:13 trade actually caught me about 6 RR. Okay, so not the best, but this is how you actually manage your trade. Alright, and the same thing happens for NJ, you can see. We took this as well. This is a 1:15. Understand where we actually take profits. We have our first TP over here, second TP over here, and third TP over here. So this is a very systematic approach to the markets, right? We are always managing our trades accordingly to the liquidity lows that are formed along the way. Every time you take a single trade over here, whenever it shifts, if you're going to hold your trade all the way into liquidity lows, then you're going to fight for a lower win rate, right? Maybe your hit rate is like 10 or 20%, but of course, you will get heavily rewarded when prices make such a move for 1:15, right? Next up, pound dollar. So you can see breakout structure on the daily time frame. Step 1 done. Step 2, look for S&D zones. So if you're looking at the entire buy to sell over here, then you have missed this move over here, right? So you want to refine the areas. You want to go down to the lower time frame. If you have went to the 1 hour and you saw this buy to sell, then you have got a move over here, right? Can you see when prices taps into this area, it gives you a new range. Okay, what do I mean by that? When prices taps into this level, you could have went to the 5 minutes to look for the shift. Otherwise, wait for prices to give you a new trading range like this. You can see this is a H2 BOS. Okay, and then trade off this range, which means to buy, to sell here. And that sets your new target. So yes, if you're looking for this entire move, if you're trading this entire framework, then your ultimate target is of course this level, correct? And you're trading off the shifting structures over here. So you realize that both works actually. Okay, H2 BOS, supply zone, breaks down. Simple as that. So now if I'm looking for sells, where am I going to sell from? Here. Clean, right? This move liquidates the positions here. You can see this is a trend line liquidity. Prices went up, grabbed them, then break structure. And this was a huge break, leaving behind the last buy to sell here. So if you play around the time frames, you understand that on the 2 hours you have this as well. So ultimately it depends on you. Okay. Now prices may come back, distribute, then break structure. Okay, ultimately grabbing this area of support. You can see this is a support level, right? Prices taps in as well. So this is a retail liquidity area. I am looking for a shift here to grab them. Okay, so understanding that yes, you have a daily POI that was left untouched, which means to say that prices may move into this area. So what you want to do is to go down to the lower time frame, okay, and see whether there is an intention for prices to move higher. So for prices to actually tap into your daily supply, this area over here has to fail, okay, because you can see this is still bullish movement, of course, right? So if prices fail to grab liquidity lows over here, then you expect the supply zones to get red, okay? So if I do not see a shift here, then prices have the intention to go higher before shifting. Okay, this move caused by the 1 hour supply may not guarantee that prices is going to go down to grab the liquidity lows here. Instead, prices may push higher, grab more orders before breaking down to ultimately grab these liquidity lows caused by this entire framework. So now NU, you can see this is an entire bullish move right over here. So if I want to be a buyer, I'm going to buy somewhere around here, maybe. Okay, here. This is where I'm looking to buy if I were to look at this entire framework over here. Right? So now, can you see that this is also a bearish movement? So ultimately, this is going to push prices towards this level to buy up. Right? So you have another structure here, and you have another structure here. So which structure are we looking at? It depends on which time frame or which structure you're going to trade. Okay, so now if I want prices to actually move into this demand, I'm actually expecting a move into this level. Because you can see, first, prices break structure here, this was left untouched. And that is why prices has the intention or the incentives to go higher. Okay, and I'm actually expecting this bullish move to hold so that prices can grab this area. Okay, this is a retail resistance. Let me just draw it out like this. Okay, so you can even extend. Okay, you can see this is a very nice retail resistance area where prices are drawn towards this bullish move, towards this supply, then the breakdown to go lower into this area of demand before going higher. So this is the projection for New Zealand dollar. Okay, so let's just remove this. So now, can you see that market structure shift after it breaks this level? This means that with this bullish move, prices has the intention to go higher. And that's why I want to be a buyer at the current leg. Okay, if I want to be a buyer, where am I buying from? I'm going to buy from here. Okay, so I'm going to buy here. I'm going to wait for the structure shifts over here. So let's say if prices shifts over here, I will buy the bullish move, grabbing this. And when it taps into this level, of course, I will stop buying over here. I will wait for prices to tap into this demand, fail to make a high high, breaks down, trade the flip zone. Okay, so this was an analysis that was done long time ago. We are still expecting after the breakout structure here, when prices reacted to this demand and started to deliver bullishly, for prices to actually liquidate this position. So yes, we have a supply here that we are looking to get tapped into. So you can see this didn't get tapped into yet, right? So this was liquidity highs that will be met. Okay, so prices are eventually going to reach this area, tap into the supply, gives you a potential reaction. So what are we looking for on the higher time frame? We are expecting a move into this supply, right? Then potentially break this area over here, because now we can see that we are delivering bullishly, correct? We are going to tap into the supply. The supply is going to fail to make a lower low, then the breakout structure, and all we need to do is to trade this flip zone. So can you see the difference and the story that is forming over here? If prices were to tap into this demand, okay, so stay with me again. Prices taps into supply, okay, fail to make a lower low, instead tap into demand here. We are not going to buy. Okay, if you want, you could look for a lower time frame shift if you want to. Otherwise, just wait for this supply to fail. Okay, and if this supply fails, then we have a very nice order flow, right? Taps into supply, fail to make a lower low, taps into demand instead, then break structure. This becomes your flip zone plus order flow entry. Okay, but if prices were to tap into supply, fail to make a lower low, break structure here, now you have two POIs to work with. You have this demand and you have another one over here. Okay, so now prices can come back, shift over here to take higher. Otherwise, prices can come back, shift to mitigate positions here, alright, to go lower, to go higher. Okay, so can you see how the story playing out? Right, we have two POIs to work with, and that's all you need to know. So lastly, for UJ, this is really clean. Okay, first of all, breakout structure here, demand area here. So if I'm looking to buy, I'm going to buy over here. So now, higher time frame narrative, where did this come from? So this comes from a daily time frame. Okay, this is a daily bias. I'm going down to the 1 hour. Okay, I can use this entire daily zone, of course, right? Then with that, you're operating on the higher time frame confirmations for your step 3. Otherwise, go and look for the 1 hour S&D zones. Okay, and scale up. So let's go to the 4 hours, and you understand that, okay, this is the sell to buy on the 4 hours time frame. Okay, so now with this, I'm going down to the lower time frame, like the 15 minutes, to look for the structural shifts. So yes, prices can deliver bearishly over here, of course. All right, and what I'm looking for is a 15M shift that breaks structure to potentially go higher into these liquidity highs. Okay, so if you're going to be a buyer, you're going to buy here, all right, or even the daily zone, of course. This entire sell to buy is valid for buys. Okay, if you're looking to work with the lower time frame range to get the best RR or get the best price, then of course you want to go down to the 4 hours demand. So with that being said, this structure now is bearish. Okay, of course you need prices to be bearish on the lower time frame for prices to tap into your POI, right? To sell, to buy. Okay, so now can you see the market structure started to shift when it broke this 4 hours low? Look at this. Right, this is the low that created the high. Prices break structure here. So now I'm looking for two places to sell. I'm either going to sell the immediate one over here or the higher ones over here. So both are valid for sells. Okay, so do we just blind fire sells like this? You could. Okay, if you know what you're opting for, right? You can do this, expecting prices to hit the daily lows, the daily demand area. Okay, both are valid. Otherwise, wait for the shift in structure on the lower time frame. This is a 4-hour POI. You are going down to the 15M to look for the shift, like this, to catch sells to go lower. This is potentially one of the ways you can get involved. Otherwise, expect the same exact move to happen here to take prices lower.